Welcome to the online news desk of the Insurance Times. The Insurance Times is the first monthly journal of insurance in India, being published regularly since 1981. We are celebrating 41 years of publications in the year 2021. The journal is published both in hard copy and online edition. Here are some highlights of some important news. Deadline for paperless health insurance policy processing and issuance extended by IRDAI. Due to the ongoing pandemic in the country, the IRDAI has allowed health and general insurance companies to continue issuing health insurance policies in electronic form and without insisting on a physically signed proposal form till 31st March 2022. Many people were finding it difficult to buy new health insurance policies during the pandemic due to the lockdown restrictions. To remove this hurdle in getting new policies, the insurance regulator had allowed health and general insurance companies to get the policyholders' consent through electronic or digital mode on 10 September 2020. IRDAI issues revised trade credit insurance guidelines in a bid to improve economic stability by addressing trade losses due to payment risks. The insurance regulator IRDAI has issued revised guidelines for trade credit insurance that will come into force from 1st November 2021. Trade credit insurance is a product that protects businesses against the risk of non-payment for goods and services by buyers. It usually covers a portfolio of buyers and indemnifies an agreed percentage of an invoice that remains unpaid because of default, insolvency, or bankruptcy. The new guidelines will enable general insurance companies to offer trade credit insurance with customized covers for suppliers, SMEs, MSMEs, as well as banks, factoring companies, and other financial institutions to manage non-payment risk associated with trade financing portfolio. Bumper-to-bumper insurance mandatory for all new vehicles. Bumper-to-bumper insurance is generally offered as an add-on to standard car insurance policies. It covers the cost for the entirety of the car except for some engine parts, batteries, tires, and glass. It is also known as zero depreciation cover. This code directs that whenever a new vehicle is sold after 1st September 2021, it is mandatory for coverage of bumper-to-bumper insurance in addition to covering the driver, passengers, and owner of the vehicle for a period of 5 years, Justice S. Vaidyanathan said in the court decision. Thereafter, the owner of the vehicle must be cautious in safeguarding the interest of driver, passengers, third parties, and himself or herself so as to avoid unnecessary liability being foisted on the owner of the vehicle. Rules of surplus distribution for LIC could be aligned with private rivals ahead of its IPO. In the wake of the mega initial public offer of Life Insurance Corporation, the Government of India is mulling to align the rules of surplus distribution of the public life insurer with those of its private counterparts. LIC is governed by a special law which currently is allowed to transfer only 5% of its surplus to the funds of shareholders. Rest of the 95% flows into the policyholders' fund in order to pay bonus on eligible life insurance policies. The said ratio is 90-10 when it comes to other life insurance companies which are regulated by the Insurance Act. The government aims to bring parity to make the investment into LIC an attractive offer ahead of the planned IPO that is to happen in the fourth quarter of financial year 21. It's only natural that investors will expect a similar structure. We shall be back after a short commercial break. Please stay tuned. Welcome back after the break. India Post Payments Bank in strategic alliance with Tata AIG General Insurance. India Post Payments Bank in strategic alliance with Tata AIG General Insurance Company Limited for distribution of non-life insurance products across the country. As part of the alliance, IPPB will strive to make available affordable insurance products through its robust network of 650 branches and over 136,000 banking access points to citizens at large. The scope of products shall include health insurance products, personal accident, motor insurance, amongst other innovative tailor-made products to address the protection needs of Bharat. Nearly 2 lakh postal service providers who are equipped with micro ATMs and biometric devices will play an important role in distribution and promotion of these insurance products, focusing especially on unbanked and undeserved customers at the last mile. Insurers to offer new title insurance policy. While transferring property, there can be gaps. Hence, the Insurance Regulatory and Development Authority of India has introduced a title insurance policy to overcome them. Title insurance is a form of indemnity insurance that protects a potential property owner against financial loss from defects in title to real property. IRDAI had introduced title insurance products a few years back to safeguard a potential owner of a property against financial loss aroused due to valid reasons. And now the regulator has introduced another beneficial clause for customers in the latest circular. The IRDAI circular said, considering the requirements of legal protection for promoters in the early stages of development of the project during financial appraisal, registration and approval with RERA authorities and safeguarding the interests of individual buyers after taking over the physical possession of the property, the regulator needs to expand the current title insurance products suitable to promoters, developers and retail property buyers. This was all from the Online Insurance Times news desk. We will be back with latest news in insurance industry in our next edition. Please click on the subscribe button and press the bell icon to get notifications for the next video. Stay connected.